Hello, everyone, and welcome to another edition of the Forex Technical Market Update. Okay, what we're looking at is a chart, a daily chart of the US dollar index. And the dollar index is very interesting to look at because it gives you a broader picture of what exactly is happening with the dollar. And we see that we are in a bull market with the US dollar here. Recently, the market came up, made a new high, retraced, and it looks to be heading back up to retest that old high. So for next week, we're going to see if the market has, or the bulls have the energy to and the momentum to trade and push the market above this $100 level. And the US dollar index being composed mainly of the euro. Looking at the euro USD chart, you see that the chart is similar, not exactly the same, but similar, but in the opposite direction. And we're coming up on testing this 105. Let me get the exact. The low is 104.59 low. So for next week, we're going to see if the market can, if the bears have the momentum to push the market below the 104.57, 104.62 low. Okay, if the market does close below that, we could be setting up ourselves. Just looking on a weekly chart, let me just compose it a little, or compress it a little, sorry. And we could be testing the $1 level, the parity level on the euro USD. Earlier in the week, I did speak about this triangle, this trend line here that was emerging in the euro. The market closed below the trend line, came back up, retested the trend line, and collapsed down. The area of concern for the bears was this 107 low, which the market easily pierced through. So we're going to see if the market can now pierce through that 104 level on the euro versus the US dollar. Taking a look at the British pound, we said that the market is flirting with support at this 104, 148 level. And I also said if the market closes below 146 on a weekly time frame, that could be fairly bearish for the market, and that still stands. So we're looking to see if the market can close on a weekly basis below this 146.48 or this 146 level. And if it does, we could see a further selling in the British pound, and will be quite bearish for the pound. Now, taking a look at the gold versus the US dollar, and what we see here is that the market it's not confirmed yet, but could be forming a head and shoulders pattern, where this is the left shoulder, this is the head, it's an inverted head and shoulders, and here is the right shoulder. So for those of you who can't see it, this is the head, shoulder, and what would happen is that the market would have to pierce above the neckline for the pattern to be completed. So that's one thing to look out for in the XAU USD. Now, before we go, I want to speak about the Japanese yen and the triangle that's happening here. This triangle is very, the Japanese yen has been in a very tight range over the last couple of months, and we could be setting up to challenge this 122 high. If the market is able to break above the 122 high, that will be quite bullish for the market. If not, and the market closes below 118, this will set up a test of this 116 level on the USD Japanese yen. Looking at the euro yen, we see that the market broke out of a triangular consolidation. As you can see, this is the boundaries of the triangle. and the market broke down below this triangle, now challenging the 127 low in the euro yen. And that's why it's very important to keep an eye out on these triangles, keep an eye out on these consolidation patterns, because they can allow you to see profitable trade setups. Now, before we go, I just want to mention or speak briefly about how to manage a portfolio. And there are some folks out there in the trading world that believe that when you have a portfolio, let's say your portfolio is 10,000, it's just going to go up to 11 to 12 to 13 to 14 to 15 in a straight line, up and up and up forever. There's only one place this happens, and that's in our dreams. And there are some marketers that give the impression that's how accounts perform, but that's not how they perform. The more likely scenario is that your account, let's say it's 10,000, will go up, head back down, up, down, kind of similar to a chart. So you may go up to 10 to 10.5, then to 10.3, then to 10,700, then to 10.5, and then to 11. But this is how the market, your account equity, will perform. There are some times where your account may even dip below the initial balance and then go up. But what I find is that a lot of traders cannot manage these swings. When the market hits a new high, they're high, and everything is, or when their account equity hits a new high, they're on a high and everything is great. And when the market starts to retrace, they get nervous and also very anxious and feel down. What can help you with this emotional roller coaster is to just understand that's how markets operate. It's very normal, and that's what you should expect with the markets. So it doesn't make it I know it's against human emotions to try and keep your emotions in even keel, but it is vitally important if you are going to survive long term in the markets. And that's whether you invest with a investment manager or you trade for yourself. If you invest with an investment manager, your portfolio is going to go up and down and up and down and up and down. And if you trade for yourself, it's the same thing. Now, the key to all of this is that to make sure that the direction of your account is heading up. Higher highs, higher lows. If your account is heading in the opposite direction, then you have a problem with your trading, and then things are unacceptable. Okay, so just remember, try. I know it's difficult. I remember I have I have a sister that's terribly afraid of lizards, and no matter how much I tell her, when I speak about lizards, I mean small geckos, and no matter how much I tell her that they're harmless, she's just terribly afraid of them. So I know sometimes it's difficult. You know that this is how you should perform, but it's when it's time to perform, and when it's practical now, it becomes difficult. And when you're experiencing the live market, it then becomes difficult. But you just have to try and keep your emotions in check. Okay, I've said enough. Thank you very much for listening. I hope you have a wonderful weekend, and we will see you again next week with another edition of the Daily Market Updates. This is Beyond, and thank you very much for listening.